Over the past few weeks, the United States has been quietly building up military assets across the Middle East. Warships, aircrafts, and additional troops have all been repositioned in the region, while Washington has issued warnings to Iran to return to negotiations. This isn't the first time that tensions have risen between the US and Iran, but markets are starting to pay attention again, especially oil, gold, and defense stocks. So in this video, we'll break down three things: why the US is building up forces, what military assets are actually in the region, and what this could mean for geopolitics and financial markets if a strike does happen. So why are tensions rising? Well, the current build-up is happening against a backdrop of long-running tensions between the US and Iran. At the core of this conflict, there's three main issues. Number one is Iran's nuclear program. The US and its allies have long accused Iran of moving closer to nuclear weapon capability. Iran insists its program is for civilian energy, but Western governments remain very skeptical. The original nuclear deal, the 2015 Joint Comprehensive Plan of Action, collapsed after the US withdrew in 2018. Since then, negotiations to restore or replace it have repeatedly stalled. Number two is the regional proxies conflict. Iran supports armed groups across the Middle East, including Hezbollah in Lebanon, various militias in Iraq and Syria, and also the Houthis in Yemen. These groups have frequently clashed with US or allied forces. Recent attacks on shipping, drones near US bases, and threats to Israel have all increased tensions. And number three, this is strategic pressure from the US. The current US posture appears to be a mix of deterrence, negotiation pressure, and preparation for potential escalation. In simple terms, the US is showing force to try to avoid having to use it. So what military assets does the US actually have in the region? Well, the United States maintains one of the largest overseas military footprints in the world, and the Middle East is a key part of that network. The most visible symbol of US power is the Aircraft Carrier Strike Group. A single carrier group typically includes one nuclear-powered aircraft carrier, dozens of fighter jets, guided missile destroyers, a cruiser, and even submarines. Each carrier group represents a floating airbase with strike capabilities anywhere in the region. These ships can launch precision airstrikes, cruise missiles, or electronic warfare operations, and they can do it all without needing permission from any country. The US also operates major air bases across the region, including Qatar, Bahrain, Kuwait, the UAE, and Jordan. These bases host fighter jets, bombers, refueling aircraft, and surveillance drones. This network allows the US to conduct operations across the Persian Gulf, Iraq, Syria, and also potentially Iran itself. Beyond carriers, the US Fifth Fleet patrols key waterways including the Persian Gulf, the Strait of Hormuz, and the Arabian Sea. This is critical because around a fifth of the world's oil supply passes through the Strait of Hormuz. Any disruptions there would have immediate global consequences. The US also has Patriot missile systems, air defense batteries, special forces units, and tens of thousands of troops across the region. These forces are designed both for offensive operations and defensive protection of allies and bases. Let's take a look at what would actually trigger a US strike on Iran. A direct US strike on Iran is not inevitable, but there are a few scenarios that could trigger one. Number one is a major attack on US forces. If Iranian groups or proxy groups killed US troops, Washington could respond militarily. Number two is an attack on Israel. If Iran launched a direct attack on Israel, the US could intervene. Number three is nuclear threshold. If intelligence suggested that Iran was close to building a nuclear weapon, then the US or Israel might consider a preemptive strike. In most cases, the goal would not be a full-scale war. Instead, the US would likely aim for limited airstrikes, targeted infrastructure attacks, or naval operations. Of course, if the US did strike Iran, then the consequences would likely be immediate. First, we'd be looking at oil supply disruption. Iran sits on one side of the Strait of Hormuz. If conflict escalated, Iran could threaten shipping routes, oil tankers could be delayed or attacked, insurance costs would surge. Even a temporary disruption could send oil prices sharply higher. As well as that, there could be regional escalations. Iran would likely respond indirectly. Possible reactions include attacks by proxy groups, missile launches, cyber attacks, or shipping disruptions. This could turn a limited strike into a broader regional conflict. As well as that, we'd have to look out for the global alliances. Countries like China and Russia have economic and strategic ties to Iran. While direct military involvement is unlikely, diplomatic tensions would rise, which would be complicating the global relations. In terms of the market impact, well, markets tend to react to risk before events actually happen. Here's what typically moves first. Oil is the most sensitive to Middle Eastern tensions. If a strike occurred, oil could spike sharply, even on the expectations of disruptions. Historically, major Middle East conflicts have pushed oil up 10 or 30% in short periods. Gold, that's also another asset that could move. It's a classical safe haven asset. In times of geopolitical tension, investors move money into gold. Prices often rise quickly. As well as that, we could be looking at equities. Stocks usually react in three phases. Phase one is shock. Markets drop on the news, risk assets sell off. Phase two is adjustment, which would likely see energy and defense stocks rise, while airlines and transport stocks could fall. And then phase three is stabilization. If conflict remains contained, markets recover. Historically, many geopolitical shocks cause short, sharp sell-offs, followed by recoveries. Looking at bonds and currencies, US Treasuries often rally, the dollar may strengthen, and emerging market currencies may weaken. This reflects a classic risk-off move. Right now, the US military buildup is primarily about deterrence and negotiational pressure, but it also signals that tensions are high enough for Washington to prepare to escalate. For markets, the key takeaway is simple. Oil reacts first, gold follows, stocks usually sell off initially, then stabilize. And for most of the time, markets price in the risk long before any actual conflict begins. If you want more calm, clear breakdowns of the stories actually moving markets, then subscribe for more videos.